Hi traders, this is Vic here. Let's look at the dollar index because the US elections are kind of over, so we can start looking back into technical analysis, but we should just go step by step slowly into the markets. It never actually harms to be cautious on the market, right? A trader knows exactly when to strike and when to hold their horses. So you need to be very, very careful what you're trying to do in the markets right now. They're moving very fast, but that fast movement can also cause a lot of problems with your account, right? So be careful with this. So let's look at dollar index, what's happening there. So as always, we start from monthly time frame, and as soon as this month started, the market started to fall down. There was initial bounce up there, which you are expecting. If you remember my previous analysis from July or August, we were looking for a long, and we went long from there. Now I'm still bullish on dollar, medium to long term. It's just that market is trying to do something which I've covered in some of my previous analysis on DXY, and that's what this analysis is about. So if I draw Fibonacci from this point to other point to topmost point, what we see that market came to 61.8 right there, and it failed to break through that. Okay, so that is why the market is actually falling now. That is acting as a resistance. So where the next market can go up to, the next level is approximately here, 91.385, 91.4 to be exact. But you see, there is a very good level here at 91 as well, right? So we can look for that kind of round number. You see, previously market has actually reacted to that level, this particular zone as well. So this is a good zone that we are looking for. So this becomes our what we call as FCP zone, because this is Fibonacci Confluence pattern zone. We are going to look for further patterns. We have an M pattern which is completing right there in there. So this is the M pattern right there. If you're not able to spot that, let me actually go to the weekly time frame and show you what I mean by that. So hopefully you're able to spot that this is kind of little ugly looking, but you see, this is the pattern that we have right there. Okay, and that completes right in 78.6 Fibonacci level. So the chances are the market will keep on falling to that level, the DXY, in the extreme situations. You see, at the moment, because of a lot of uncertainty and other stuff, right? Related to US elections and coronavirus and all stuff, market can still start to reverse from here. So we'll look at both bullish and bearish situations, but this is looking like a good level. Now if I just go to the daily time frame to inspect the current structure that we have, you see that market created a W pattern, and even though personally I was not trading as per my trading plan because of market situations, this was perfectly aligned to 78.6, and that's exactly the same pattern which we are going to see completing around here in this FCP zone. But that is going to be an M pattern. This is a W pattern, that is an M pattern, and that is appearing on monthly time frame. So for next month or so, maybe this current month, November and December, we can see further fall back into this zone. But after that, dollar is going to be very, very bullish. It is going to go upwards, and that can also be seen in other currency pairs such as Euro USD and few indices. If you go to S&P 500, you will also see that it is also correlating with this analysis. Okay, so if I just inspect this particular structure, what I see that market is creating another M pattern. If you're not able to spot this FCP pattern here, there is Fibonacci confluence pattern which is going to complete around here. Why? Because if I draw Fibonacci on this, you will notice that there is one Fibonacci number here present here, and that is right in this zone. There is another one here. So you see, this particular zone is very, very important. This is where we will be looking for long position. So what do we do until then? Now, thing is that because this is an M pattern right here, right? And if you're looking for a short going into this, you should be aware of few levels here. One is obviously this one, this low. because that has a potential to actually push the price upwards, even for like a day or so, or maybe like a few hours. But that is a very, very important level. Market has to go through that to reach this zone, right? So this is going to be very important level. Another level that you must watch is this midpoint of this M pattern, because this actually pushed the price upwards. So it can push the price a little bit upwards again, because that's what the market did last time. So you can expect market to do a little bit again. It may not like be a complete reversal. It may be a little reaction, or something like that. So if you're a day trader or short-term trader, then you can look for that sort of move there. Okay, what else that we should be looking at? Now there is something which is appearing right now, is actually, if I go to the 4 hour, there is an M pattern right in this structure as well. So if I go to the 4 hour, you see that M pattern is right here. Okay, and that can actually push the price upwards, and that confluences nicely with what we just talked about. We just talked about that market can actually push price upwards a little bit, and it remains to be seen whether it actually turns into a huge correction or reversal. But there is a chance that market can actually go upwards for at least like a day or so, or maybe like in a few hours as well. But there are chances, and that is also being supported by this M structure. So if that is the case, then we are looking for market to reach somewhere around here, and and then if it continues, then obviously like it can start moving upwards. So this level automatically confluences with the previous structure levels here as well. So this is looking like a good level. So how do we trade this? If you're looking for short-term move in the market, you should be looking for the overall trend right now. If you talk about this, that is still down. So if you're looking for a short, then you must wait for a confirmation once the market has retested these sort of levels, and then you can go for a short. Okay, and they can continue going short as long as your trading plan allows you to do so. Okay, if you're looking for a long, then you must wait for some kind of confirmation here. In our trading techniques, in our methodology, which is FCP based, Fibonacci confluence pattern strategy, we have 5 confirmation techniques, and we require at least 2 to be valid. So we'll look for confirmation techniques, and then we'll go for a long into this level or this level. But we won't be taking like long positions for extended profit targets. We will not try to shoot for something like this, no, because we already know that market is downtrending at the moment, and there is high probability setup down here. So any long positions that we are going to take right now are going to be for short term only. Okay, so this is what we have on DXY on 4 hour. Let's go back to the daily time frame. I'm pretty sure I'm missing something. It's just that I'm getting this feeling that I'm missing something. Let me just quickly see what I am missing. Okay, so this is looking like a good zone. Okay, and this is our FCP zone that I have covered, as we have multiple Fibonacci confluences there. There was something. Pretty sure there was something. And this is the proper zone that we are looking for. So let's change the color of it. Okay. So this is the major FCP zone that we are looking for. This is the major one. This is the minor one, but this is very important. The small one is actually very, very important. Um, yeah, there was something actually. Let me just quickly go back to monthly time frame and to see. Okay, okay. Let's bring in our indicators. Yes, yep. Okay, let's close this and go to the 12-month time frame. Okay, the maximum it can go up to is 90.8. Yep. Okay, so this is also a very important level that we have. And if I come to the weekly time frame and close this, that looks like a good one. Okay, so this is what we have on the DXY. Let me see if I can find something else. Nope. Okay, right. So on this side, we have these levels to look out for, and then on the bullish side of things, once we have gone through this level, then what we are looking for. Okay, once we have gone through this level, then we are looking for an extended extended W pattern, which is still forming right here. So you see the market is creating a W pattern which can turn into an ugly one, and if that happens, the market is expected to go higher. And for that, it will have to go through these levels. Obviously, it will have to go through these levels to be able to reach there. But once the market has started moving upwards, either from here or from somewhere around here, and it finds enough bullish momentum, then it will just go through this particular zone, right, is not going to hold it. This is the market will just rush through this, because it has already been consolidating, and it's kind of like winding up right now. And you see, this is what I call as bad behavior. So when the correction comes, it usually goes deeper. It is very quick, and it goes through all of these bad candles which are formed in the market. So when this bullish momentum will start, it will be very, very quick, and it will be deeper into this leg. So this is what I have on DXY. Hope you enjoyed this analysis. If you did, make sure that you hit the like button, and in the comment section let me know what do you think about this analysis. If you have any questions or anything like that, let me know in the comment section, and share this analysis with other traders and trading communities. I'll see you in the next one. Thank you.